Hello legends and legendates. I'm just going to do a quick full market update to really keep you on track. So first of all, starting off with Bitcoin. Looking at this Bitcoin price action, we can see how we have been pretty much range bound for many weeks, from here to here. And that lasted for just over a month actually. And now we actually broke breakdown here. What's interesting is that on the way up here, this was a break of structure. Because you can see how we had to push up, push down, push up. So we're taking on structure. And then we had a range bound environment, and this is a support box in this zone, so roughly like this, a huge area of demand we kept bouncing off. But then recently we actually, after much needed excitement, because it was so boring, honestly, it was essentially, you could see people just jumping out of their chairs just for $10, $20 moves of Bitcoin. But finally we got this breakdown, and so this is actual changing character. It's reversing the trend, because this is an uptrend, and now generally this has been a downtrend as a result. So now we seem to be forming a new mini range. You could around this level here. So from 24th of July to here. Statistically, these kind of events, you are more likely to break down actually to 28.2, 28.3 roughly. But you have to notice also there's a lot of lower highs. So stops here, stops here, stops here, stops here. So a lot of people put the stop losses here. And so of course there could be an event where you trigger the stop losses and then go much lower. Just zooming out a bit, this is still pretty much valid in my humble opinion. We've been pretty much in this somewhat macro ascending triangle actually, because we've had a first touch point here, second one here, and third one here. So you might get a move, legends, like this. Third one here, and you might get another pop back down like this, and then compression, and then eventually a breakout to potentially 38, 30, 40k. That's possible. The more bearish situation would be if we do get a pop back up, but then, of course you've got Elliott wave structure, 5 waves usually, but if you get a breakdown and then a back test of this could be quite bearish, and perhaps we get a move to potentially as low as 24, maybe 20k. So that's just one step at a time. It's important not to get ahead of yourself. But what we notice here is particularly when we actually, before we had this dump here, there's quite a few imbalances that were effectively have not been filled yet. So I could see a situation like this where we get a pop back up, of course, to clear some of these imbalances, maybe as high as 30.9, and then potentially move back down to here. So this untapped point of control. Untapped points of control are essentially high volume areas where price actually had a lot of demand previously. And so this is the main one here, and there's also a key one here actually, 31.2. Okay, so these are key areas that I'm really looking at. I also spoke about how we had this key order block here. So effectively, we had this range here and we broke down. And what happened essentially here was we had this key area of supply here, the supply box. This was the zone here. And it's not a coincidence how I explained we can get a move back up here. And we had a wick up here and move back down. And essentially, markets like to move from imbalance to balance. And it was just clearing up the imbalances and getting another tap of this order block and they'll be dumped. Also, just something else to look at for completion's sake. This is the Gaussian channel. And historically, this actually has certain nuances to it. So now we've actually gone from red here to green. And just good in some sense, but you could still get a move back down to this top band, so 28.4. So we see that number keep coming up again and again and again. So a potential situation could be a move back down to here and then a bounce back up. That is something to be careful of. Of course, you don't want to take it for granted that that's definitely going to hold. Of course, you can just have a breakdown below this Gaussian channel point and go to the midpoint here. That's definitely possible as well. And perhaps we go as low as here, 20.2, if this midband is lost. But so far we are above this, which is nice. But especially for the shorts I've been running from 31.573, I've taken a huge chunk of profit. I actually even really notified the Discord community in real time, because I've been holding that short now for over a month, just under a month actually. And so I'm also trading Forex and commodities. And so I don't want to be overexposed as well in terms of my risk. And so this is just something else to look at really. And the 5-day Gaussian channel we're still well above the zone. This top band is 26.6. So that's near to this untapped point of control. So it's just, I never look at one thing specifically. It's about taking and using as many tools as possible that you see fit and taking the 70 to 80% setup. And another thing is we have this impulse to here to here. This is a 0.5 Fibonacci. Anything above that is premium and below that is discount. We're still in this premium zone. And the 0.5 is at 28.3. So that is just something that keeps covering up again and again and again, that zone. Then I also want to look at just general Fibonacci. So the 0.618, which is the key Fibonacci, 27.5k. So that could be a potential bounce region. So you of course you get a move back down here potentially, of course, after you move some stops. But you have to also be careful, legends, how when a lot of people are looking at the exact same trend line, okay, the first two times you might get away with it, but now it's just a bit obvious now, so you could overshoot it, and it won't be perfect. So to realize this is quite a new asset, you know, you don't want to take it for granted. But let's also look at the wider markets as well. So SPX, SP 500, the US 500 company is a tracker for that. So I'm planning out a short actually for this. I haven't entered it yet, but you can see how essentially I've been very, very patient for this chart. This 4.3K level is a very key level to hold. And here we had this, essentially this uptrend. So we had a push up, push down, push up, push down, push up, push up, push down. So this essentially took out the structure, the support box. So we have, of course, we can get fill-ups, maybe recover some imbalances in this supply zone here. So 4.6K, but so far we had another dump here and we took out this low. And so we've essentially tapped this supply zone here. So you might get a potential short setup. So that's something else I'm looking at as well. I think from a macro point of view, the first warning sign is if the 4.3K level is lost, then you might go back into this pre-existing range, like essentially in this range here. So that's just something else I'm also looking at. Of course, the bullish situation could be you might get another run-up and grab this liquidity here around this 4,640 level. It's a key resistance from 30th of March 2022. And then if you get a false breakout and move back into the range, that might be a nice short setup as well. So yeah, I mean, a lot of patience is required essentially here. Looking at, of course, the NASDAQ. Very often I find that NASDAQ has a similar correlation to Bitcoin. Not 100%, but it does give some clues if you look at it. It gives a really holistic picture. So far, we've actually been an uptrend up to here, but now we've had a somewhat change in structure. So if you can see how we've actually taken out these lows, and so maybe you might get a move back down. There's something else. It's been a series of lower highs. Maybe get a pop back up and a move back down eventually. But if you look at the range, so we have that question: is this some kind of, do we go back below this range? Because if we get below this level, this 15.2K level, you probably get a move back into 14.6. Or is this a key support resistance flip? Do we flip this region as, so do we flip this resistance as support essentially and go back, go further up? Looking, of course, at the VIX. VIX generally has an inverse correlation to risk on assets. We notice how, especially how the VIX essentially fell below this July 2021 lows. And I explained that how that could be a potential long setup. Target, take profit 1 here and take profit 2 here. And so far it seems we're going back in this. We'll have to see. The next lows are here, so 11.82. Then, of course, looking at other markets, so especially the Dixie. So Dixie is the US dollar index, and we notice this trend line coming. Generally speaking, Dixie has an inverse correlation to risk on assets. But you can see how we've had this trend line. So first touch point here, second here, third here. So questions, do we have a potential pullback here? Maybe, we'll have to see if we get as low as $98. But if you draw Fibonacci actually from this impulse run up to here, maybe you get a move down to the 618 at least, perhaps. And does that somewhat correlate with a run up for risk on assets like Bitcoin and other stocks? Because naturally they have an inverse correlation to this. Then, of course, a lot of you know I'm quite a huge fan of gold trading, but especially the last couple of days have been quite boring. We essentially now, we're still back down here, so we'll have to see where we go right now. And I will inform you of any setups for this. But the chart of the week, actually, which has been very interesting, is the oil chart, so the crude oil futures. So this might be a potential short setup, because we essentially running up to this local resistance around 83.51. Question is, do we get a false breakout like this and go back into the range? That might be a potential short option. So it's just a lot of people twiddling their thumbs. They're essentially forcing setups in assets that they like Bitcoin and crypto. But the problem is when the markets have very low volatility periods, a lot of people just force setups, and that essentially leads to the eroding of their capital. And when the actual high probability setup actually comes, they cannot capitalize on that. If you don't like the asset in terms of the volatility in the current phase, why not stick to another asset that you're comfortable with? So this is why I don't just stick to one asset. I diversify. I'm a crypto, commodities, equities, and indices trader. So I do all those. This is the advantage. We're just crushing it in other markets. Especially, we explained how we had that New Zealand dollar long. So where was that one? So that was Australian dollar. So yeah. So we caught that. So I actually caught this long here. So from here to here. And I actually informed the group in real time, so that was quite nice. So the next interesting setup is actually the euro dollar chart. It's coming to some really key for our demand zone. Because you can see how we had this downtrend here. This push up here took out the structure. So it's this change in character. So you might get a potential pullback here, which we got. And let's see if we get a change in structure here. And that might be a potential long. So the next potential setup is the euro dollar chart. And I explained how we had this downtrend, 4-hour downtrend like this. And we essentially took out the structure recently in Friday. So this is the high here taken out. So we've actually now gone back to this demand zone. Question is now, do we get a change in structure? And that might be potential long opportunities. So there's plenty of opportunities. You just have to know where to look for them. I'm also going to look at the Bitcoin dominance chart as well. So I've drawn this trend line, which is still intact. So from this touch point here, and next one here, 73%, and the next one here. So question is, do we get a pop back up eventually here to around 57, 58%? And you have to really appreciate, guys, in these markets, a lot of retail traders are a lot weaker. And you can see how a lot of people don't actually know what a high Bitcoin dominance actually looks like. If you think about it, a lot of new people joined around here, so 2022, 2021, but all they've noticed is the Bitcoin dominance going down and most of the time being below 50%. But when this happened here, so it was in 2018, so from here, run up to here, this is brutal. And if this happens, of course, altcoins can go up in terms of dollar value, but they could be losing a lot in terms of Satoshi value. And yeah, I mean, it made sense to have a bit of a pullback here because on the way up here, this was a bit of local support. So it makes sense that there's a bit of rejections here and nothing goes up in a straight line. So you have to be very careful when this actually happens. Total crypto market cap hasn't changed, still 1.13 trillion. I don't expect us to get through 1.28 trillion in a long time. Of course, now looking at the long to short ratio for retail, you can see how now we've actually had a huge dump in the long to short ratio. You can see how we had the pump here, 0.69. So retail were heavily net long, and the market generally moves to make fools out of the most people. And so now we've had this pullback here, and so there's less long exposure, which is good for people going long, but it's still heavily net long in the higher time frames. But here, the open interest has gone up a lot, and so you can see there could be potential retail shorting the recent pullbacks. That's led to a potential short squeeze. But guys, thanks a lot for watching. Do subscribe to my YouTube channels where I post market updates and my passion for crypto and trading.